Hey guys, and welcome back to a new accumulation zone video. Today we are not going to do a trade recap. Today we are going to talk a little bit more about different use cases for the ScalperPro indicator because they are really great. I'm specifically going to be talking about a divergence example because recently on our Discord server I started to share some divergence examples on how you can utilize the ScalperPro indicator to trade divergence reversals in the end of the day. And today or yesterday I prepared a beautiful example on US30 and we're going to take a look at it step by step. Alright guys, but now let's get started talking about reversals. So first of all, what's most important when you're trading reversals is that you actually start to stack up the confluence. So ideally, for the divergences that are most likely going to play out, you also want higher time frame confluence. And the first confluence I prefer is that on a 5 or 15 minute time frame, it could also be a higher time frame than that. The ScalperPro right here on this chart, this top one right here, the ScalperPro must be in either one of the reversal zones. And the reversal zones are those green highlighted bands right at the bottom, green for the bullish one, and at the top there's also a dynamic bearish reversal zone. So ideally on the higher time frame we like to see price being inside of this reversal zone. And we saw that yesterday at New York Open. We dropped roughly around 570 pips. That's a quick drop to the downside. And also the ScalperPro inside the bullish reversal zone. So, and now already, if we are looking at a lower time frame, so now we went down to the 5 minute time frame right here, we can see, first of all, don't look at the chart, the ScalperPro is below that bullish reversal zone. So that basically tells us that price is super far extended, even below the bullish reversal zone. So that's all we want to notice right here on the ScalperPro. And as we can see, we had this New York Open drop, and slowly but surely the sizes of those candles got smaller, or at least the body smaller, and right around this level we saw lots of wicks forming here. Notice the big wicks to the downside, and the candle body and overall the candles themselves, they started to get smaller. If you try to forget everything that's coming right here, you can see the candles are getting smaller right here, and the big wicks, they are into which direction? Downside, downside, and downside. Alright, that's our confluence for the 5 minute time frame. The next step that I usually follow is that I drop down lower than the 5 minute time frame. It could be the 4, the 3, the 2, or even the 1 minute time frame. It depends. I'm stopping on the time frame where I spot the divergence first. Doesn't necessarily mean I always enter on the 1 minute time frame if I already see the divergence on, like for example on this chart yesterday, on US30, a 3 minute time frame. Because right here, we actually saw the ScalperPro also being below the bullish reversal zone. So we have the ScalperPro inside the bullish reversal zone on the 15 minute time frame. On the 5 minute time frame, we actually had it below the reversal zone. And now on the 3 minute time frame, this is also lining up. And as you can see, the candle coloring made by the ScalperPro indicator has been bearish. We've been below the average line of the ScalperPro. So right here we saw the ScalperPro made a move further to the downside. So did US30 right here. Now here comes the crucial difference. We did not see a lower low on the ScalperPro right here when we formed this candle. And that's really important because right here on US30 we actually saw a lower low has been made. We did not see that on the 3 minute time frame on US30, on the ScalperPro. Sorry about that. So we notice, okay, there is a bullish divergence. it is in play. So what do we do next? The next step is pretty simple, because all we're doing now is we are waiting for the ScalperPro to cross its average line and thereby also change the candle coloring on the chart. And as you can see right here on this candle, we changed the candle color. So what do we do at this point? We see this candle is forming. Okay, we already see this candle color change is likely in. So we prepare our order, we measure our stop loss, or we use a risk management tool, and we place our trade. The stop loss always goes below the lowest point. That's really important. We do not place it at a body swing low whatsoever, always at the very low, because that's the point where our divergence has been invalidated. And what do I mean by invalidated? If we make a lower low than this one, then it continues and we look for the next divergence. And this could go on for 3 or 4 or 5 times. I think the longest streak of losing trades that I experienced trading reversals was around 6 losing trades. And this already brings me to my next point, that as soon as my trade reaches 1-to-1 risk to reward ratio, I am moving my stop loss to break even. Let me get this straight. Once we hit a 1-to-1 risk to reward, I always move my stop loss to break even. Why? Because it's pretty simple actually. In case this is not the reversal, this sharp reversal, this sharp pullback we're actually looking for, then our stop loss is very likely being hit. Then it's pulling back to our entry price or our entry level, and we get stopped out at break even. And we likely get another chance to try it again. And as soon as it hits 1-to-1 risk to reward again, we move our stop loss to break even. One of our community members, big shout out to Ulrich, is already using this principle, and it's working out really well because you really protect your capital right here. You really do. It's really important to make sure that once 1-to-1 risk to reward is hit, we move our stops to break even to protect it. Because if we got the entry at the very bottom of the reversal, it's 90% of the times not going to go back to our entry once 1-to-1 risk to reward has been hit. And from there on, it's pretty simple. You just take partials along the way. Of course, you have ideal profit targets, but that's also really important. Those are your best case scenarios. It doesn't always mean when you're trading reversals that it's reversing 100% of the range. This would be your ideal profit target. Or you go back to the higher time frame and check, okay, where could price reverse to? So therefore we simply go back to our time frame. I would measure this range and say my ideal take profit target for this pullback reversal would be the 50% level if I would draw a Fibonacci tool from this high all the way to this low. But important, this would be my ideal profit target. This does not mean that I do not take partials along the way, because I want to make sure that I'm actually getting paid. And not only getting paid if my ideal scenario, best case scenario, take profit target is being hit. Right here we have the example actually of how I would define my ideal take profit target. And as you can see, that reversal played out very nicely. We pulled back almost to the 50 level. It took until the next trading day basically to go above the 50 level and actually go a little bit higher. But we do not want to stay in that trade overnight. We're looking for that quick reversal to the upside. We get our 2, 3, 4, sometimes even 6 risk to reward, and we're out. And we slowly but surely scale out of our position. That's important because remember, you have to pay yourself. And not just at your ideal target, already before that. Because you never know if it is actually hitting your full take profit target. So partials are necessary if you're trading divergence reversals. And for our smart money concept and ICT fans, I also prepared a little analysis that is basically lining up perfectly with the example we looked at earlier on US 30, also 3-minute time frame, where we spotted this bullish divergence first. we saw that we formed a lower low. So we took sell side liquidity below this low, and then we broke market structure, because if we look at market structure right here, we formed a low, we pulled back, and we formed a lower low. We did not do it on the ScalperPro. That's where the divergence is coming from. That's when we start to look for the reversal. And with this leg to the upside, we broke our most recent lower high that has been formed after our most recent lower low has been taken out with this move to the downside. So we broke structure to the upside, and now we are in bullish market structure. And look what happened even before we broke the market structure. We changed the candle colors, and it did not change after that. So this is also big, strong confluence for this reversal opportunity. And like the whole smart money concept cult, you could pretty much say, or ICT fan base or traders, they would wait for the market structure shift to happen. They look for a fair value gap, and right here we have it. This candle right here created a beautiful bullish fair value gap. Price retraced and even went further than that. Right here into the order block, this candle would represent the order block, and also touch the optimum trade entry, which would be roughly around a 70% retracement of our leg to the upside, which broke market structure. That's important. We only look for an optimum trade entry when market structure has been broken, fair value gap has been left behind. When in this leg that broke market structure, we look for an optimum trade entry for a even better entry into this reversal. Because remember, our entry would have been this candle right here by simply just waiting for the candle color to change. But to optimize your risk reward ratio a little bit more, you can, for example, get the entry on the order block at the midpoint of this fair value gap, or ideally at the optimum trade entry, which played out just perfectly. And just to this little peak right here, this already has been a 5-to-1 risk to reward ratio. Very simple, very effectively, simple and very beautiful candle color change done by the ScalperPro. And yeah, that's basically how you stack confluence in order to only take high probability divergence reversal opportunities. Another quick example I want to talk about is the importance of timing, because most of the time if we try to catch a reversal on a lower time frame, those reversals occur with the opening of a new hourly candle. So right here, for example, this was on the 28th of April. During the London kill zone, we saw this trend to the downside, and right here at 4 AM, a new hourly candle opened up. And this red box with those two wicks represents the hourly candle. And as you can see, inside of that hourly candle, we moved to the downside, 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 and we formed our low right here. But we closed exactly at this level. So I actually made a small little drawing mistake here, but that's not really the point here. So we moved to the downside, and on the hourly time frame, we formed a low right here. What did I do? Right after this next hour opened up, they faked out price below this low, triggering sell stops and breakout traders from that higher time frame into a short position, because before that candle, we've been short already, or we had already 3 hourly bearish candlesticks. Hourly breakout traders want to continue into that direction, so they place sell stops, sell limit orders right below this low, and this is the 3 to 4 AM candle low. And now let's have a look at the lower time frame to see exactly what happened at this time. On lower time frame, we can see A, ScalperPro is inside the bullish reversal zone. B, we can see we formed a higher low on the ScalperPro and a lower low on our US 30 1 minute time frame chart. And this is exactly this point I was talking about. They triggered, or they moved price below this hourly low, maybe already liquidating a few early longs that already tried to catch that reversal, who knows. And immediately, once they broke this low, this hourly low, we saw a beautiful bullish momentum candle right here to the upside. And also a ScalperPro candle color change from white to blue, so from bearish to bullish. Without any unnecessary SMC or ICT concepts, a very simple trade here, and this is what I mean when I'm saying as soon as your one-to-one risk to reward is hit, moving your stop loss to break even is the safest thing that you can possibly do if you trade reversals, because if the reversal is actually the reversal you're looking for, so a sharp momentum to the upside, for in case of a bullish divergence, of course, and inside the bullish reversal zone, then it's never going to come back to your entry. Maybe sometimes there might be a wick that stops out at break even, but even then that's not a big deal, because at least you use proper risk management, and that's the only thing that we can actually control, especially when trading a reversal strategy that's going against the general trend. So we got our entry on the candle color change, and usually my full take profit sits right at the VWAP, but it depends on the setup really. But as you can also see, this has been our previous hourly candle high, which has been targeted here. We took it out, we started consolidating, we touched the VWAP, and we went back somewhere around the 50 to 70% retracement before a continuation further to the upside. Could go on and on with examples right here. I actually shared a lot of examples recently here on our ASAT analysis channel. I also just created the Divergences chat. So yeah, make sure to join us on Discord, because there is lots more. There are a lot more examples for ScalperPro bullish divergences. As you can see right here, we got a beautiful dump, and on the ScalperPro we made a higher low. We did not even touch the bullish reversal zone here, but yet here we did, even though we made a lower low on the chart. And if we go down to the lower time frame, we see we got our first candle color change right here. We placed the stop right at this low, roughly at 1-to-1 risk to reward. The stop has been moved to break even, and I targeted the rest of the London session highs, which have been taken out, and then we pulled back. Very simple concept, but make sure to use proper risk management and practice on a demo first. It's really, really important. Do not risk live funds from the first day, especially if you never traded reversals. And overall, I would recommend a risk of 0.25% to 0.5%, unless you are a very professional trader that has been trading divergences for a long time and now watch the video and wants to give the ScalperPro divergences a shot. Alright guys, and this is already the end for today's video. I hope that you really learned something from all the information I gave you on how to trade ScalperPro divergences. So yeah, make sure to join us on Discord if you've got any other questions about divergences or anything else like the ScalperPro. Simply go to the right chat, ask the question, or open a ticket by simply going on to support, create a ticket, and I will help you straight away. Alright guys, until then, take care and trade safe.